Hey, Musk, instead of buying Twitter for 45 billion, why don't you just buy the entire transparent holdings of all silver investments in the entire world for the same amount? Well, hello there, my friends. Rafi here from the Endgame Investor for this week's weekly silver report for Arcadia Economics. And we have some fun stuff for you as always. First of all, we got silver premiums breaking the 20% mark, bullion banks in trouble in the gold market, possible record daily deliveries in silver tomorrow or today if you're watching this on Friday, April 29th. And remember, there's only about 17,000 contracts worth of registered silver available on the COMEX, all of which Elon Musk could buy for just a few $billion. This video is sponsored by Fortuna Silver Mines. And here's another thing I like about Fortuna Silver Mines, and that is that they are hedged not against gold or silver, but against heating oil, jet fuel, which means they have capped their mining costs. And if you're worried about a short squeeze and what happened to that nickel mine company as nickel got squeezed and a nickel mine got destroyed because of that, that's not a problem with Fortuna because they have contracts that mature monthly, so there's much less of a margin problem. They are wisely hedged against what needs to be hedged against, but not against gold and silver. Now, I'm sure we've all heard that Elon Musk bought Twitter for something like $45 billion or whatever the number is. Well, Elon, I have an idea for you. Maybe in addition to buying Twitter, you can just buy the entire transparent silver holdings, the total value and total weight of published repositories, mutual funds, and ETFs of all silver investments in the entire world is about $37 billion. You can pick up the entire thing for less than you bought Twitter. You can buy all the money in the world, literally, for $37 billion. What does that include? In that total includes all of COMEX, all of TOCOM, all of Central something of Canada, CEF, Permanent P Fund, SLV, Gold Money, ETF Securities, ZKB, Julius Baer, Sprott, Deutsche Bank, Bullion Vault, BMGE, Gold Claymore, Silver Bullion, Japan, all of Japan? What does that mean? I don't know. Brompton, UBS Bank Source, Perth Mint, California Mint, or is that Canadian Mint? I don't know. Anthem, and Safeport. What are all these things? I really don't know, but this is the total amount of all investable silver products in the world that are transparently held. We're not talking about people's private silver collections in their safes, in their basements, or whatever. This is transparent stuff. Now talk about a silver squeeze. Is it going to happen? Yeah. Is a billionaire going to help us do it? Maybe, probably not, but it will happen in any case. Now, there is something big happening in premiums. Two big things, actually. This, once again, is the junk silver premium cost, which is basically the average cost of a coin divided by the spot price. Now, I've made four little rectangles here. Five, actually. Five rectangles. This is the premium for junk silver going back to 2008 financial crisis. That's as long as the chart goes on Gold Charts or us. And you'll notice something about the first, the second, and the fourth rectangle. That is that each time that these premiums spiked, it was because the spot price was collapsing while junk silver was staying stable in price. And that's why the price of junk over spot spiked higher. It wasn't that the price of silver was really moving. It was that spot was collapsing. This is what happened in 2008 here. This is the premium spike from about, looks like 12% or so to about 40% in 2008. That was because the spot price fell from what looks like about 20 to below 10. I don't know exactly what that low is, maybe $8. And then in 2013, we had the gold and silver sell-off. Spot price collapsed from looks to be about $32 to about 17. And silver premiums spiked because physical silver prices stayed pretty much stable. Now, we'll skip 2015 for now for a second, go to 2020. Again, we see the silver price, spot price tank to about $11, maybe $10.50, and silver premiums again spiked from 0 to 35%. And now we go back to 2015. What was going on there? We saw, first of all, that this was the bottom of the silver bear market at around $15 or so, a little bit lower, $13 or so. What we were seeing then was a stable spot price and rising premiums. Now that is different than a falling spot price and rising premiums. Stable spot price and rising premiums means the demand for silver is actually rising. This is what was happening in 2015, early 2016, and that was a signal of the end of the bear market. Demand for silver was rising strongly because the spot price was stable, but the premiums on physical silver were rising to above 25%, almost at 30%. That was a signal of the end of the bear market. Now, that is exactly what is happening now, especially since silver squeeze. Here's silver squeeze over here. That is this first jump in this line of 2021 moving up here. That was February 2021. That's when silver squeeze began. Since then, since silver squeeze, just post silver squeeze, the spot price in silver has been bobbing up and down, hasn't been really moving that much. And we're all frustrated. And now it's at 23.50 or whatever it is. But basically, we have a stable silver price, spot price, and rising premiums, strongly rising premiums. It was about 4% at the beginning of silver squeeze. Now it is at 20.63%. And this is from April 26. I wouldn't be surprised if it went up again today, though the charts for today are not available yet. And so for the first time since 2015, we have rising physical premiums with a stable spot price, which means the price of physical silver is moving higher, and it's not just the spot price that is falling. This is the gold market, and there is something special, something interesting happening right now in the gold futures market. It will be reflective of silver, as the two metals always end up trading together more or less. Now, the bottom bars here is open interest in gold futures. The top is the gold price. Now, these four rectangles show you the last four major declines in the gold price for the last year. We remember in November 2021, gold hit a high at around 1870, 1880 or so, and there was a big sell-off, right? Huge sell-off from 1880 to it looks to be around 1760 or so. During that sell-off, open interest, the amount of contracts open in the futures market on COMEX, collapsed from 620,000 down to about 500,000. So about 120,000 contracts were covered. That means the bullion banks were able to cover a big chunk of their short positions. This is the same thing that happened during the January-February correction this year in 2022. The gold price went down from about 1850 to about 1760 again, 1770 or so. And again, open interest, the amount of contracts open was able to collapse from about 570,000 to around 500,000 again, over 70,000 contracts. So not as big of a collapse, but still 70,000 contracts is quite a bit. Now, that character has changed since the top we saw after Russia's invasion of Ukraine, when gold matched its high from August 2020 of around 2070 or so. And then there was a huge price collapse from about 2070 to below 1900. So we're talking about a decline of $170, which was stronger, bigger decline than this decline, and certainly bigger than this decline. And what happened to open interest? We were at 645, 650,000 here at the peak. And open interest is still stubbornly high, above 600,000 here. Only about 40,000 contracts were covered during this $170, $180 collapse here, which means the bullion banks were unable to close their short positions. And on the COTs, you'll see the net position of the bullion banks is still, I think, above 200,000, comfortably above that, which is very high for the amount of short contracts. And now we're seeing something similar play out since gold was able to hit 2,000 again in mid-April, around April 15th, I believe. Since then, we've seen a collapse of about $130 to lows, I think we're on 1870 today. And where has open interest gone from 580,000 contracts to now about 570? We're back to 570. It says 566,876, but I looked at the COMEX numbers and we're back to 570,000. So barely 10,000, 20,000 contracts were covered in a $100+ move in gold, which means the bullion banks are stuck. They cannot cover anymore. And the next rally in gold could bring their short positions up to a record, I would say maybe 300,000 contracts, and they will be in serious trouble. Now, I want to move to silver deliveries. This chart is the chart of silver deliveries, daily silver deliveries since 2005. You'll see I drew a red line over here, this long horizontal red line. These are daily deliveries of contracts delivered, warrants delivered on a daily basis. We see the record here above 10,000. I think it was about 12,000 in one day or something like that. July 2020. That is when COMEX ran out of registered supplies and they had to shuttle over from the JP Morgan vault mostly several thousand contracts. I think it was about 20,000 contracts worth from eligible to register. They had to move over in order to satisfy delivery demand. Now, only one time did we get over 10,000 deliveries in a day. That was that time, July 2020, but look where we are now on the CME. How many contracts do we have left over in May silver? And it goes to delivery tonight. And if you're watching us on Friday, it goes into delivery. It went into delivery last night. 10,785 contracts left in the May 2022 contracts. That means that they are at least going to go to delivery. That is over 10,000. We could be at a new record this month. We'll see. These numbers tend to change in the last minute, but it's looking good, and it's looking like silver deliveries could hit a new record. And keep in mind, this over here is the total amount of registered silver that is on the COMEX, silver that is tagged for delivery, 83.78 million ounces, which translates to 16,756 contracts. That's what is available, with 10,785 still open. Suppliers are going to get low, and we'll see if they have to shuttle any more eligible into registered category. So yeah, it's been a rough week. It's been a frustrating week. But we're seeing from the premiums rising with the stable spot price that there is bubbling under the surface. Just got to stay a little bit more patient. We've heard that before, but it is the truth. This will break. It will break soon. And yeah, it would be nice if Musk was able to join up in the silver squeeze movement. That would end things pretty quickly and free the monetary system. But what are you going to do? Anybody know any Elon Musk's multi-billionaires that want to buy all of the transparent silver holdings across all the world? This is Rafi of the Endgame Investor coming at you with this week's silver report for Arcadia Economics, and I will see you, as always, next week.